Hey guys, how you doing? Brian Silvestry here live on Facebook and also setting up Instagram as well. So just give me one moment. I'm a real estate broker for the last 21 years and just want to talk to you a little bit about what I am seeing as far as activity here in the Manhattan market and also talk a little bit about what I'm seeing in the Bronx. First of all, a little bit about myself. I've been doing this for 21 years, so I've been through just a lot of different types of markets. The 2001, when the when 9/11 happened, 2008, and around that time of the financial crisis. In the past 16 years, I've also sold foreclosures for banks as well. So I've had a lot of experience just in and around the real estate market. As I mentioned in one of my talks a couple weeks ago, what I'm seeing now is very different than what I saw in the past. In the financial crisis, it was subprime that was really pushing a lot of things. And at that time, I was selling properties in Brooklyn and Queens and especially areas in Brooklyn, like Bedford-Stuyvesant and Bushwick, gentrifying areas, and in Harlem, where the prices had gone down substantially. And then now in this last run up of in the last real estate boom, it was quite different. We didn't see banks making loans like they were in the past. So we don't have people that are highly leveraged as the subprime financial crisis happened in around 2008. Now, what I'm seeing is I'm seeing activity. We, as real estate brokers, were deemed essential services very early in the process. And what that means is that we, like a lot of other people, can work from home. So we can do virtual visits, we can do virtual tours, and we can't do what we normally would do, which should be to go and just sit down and meet a client face to face in their home or go to a property, shake hands with a buyer, and physically go around them. So our new normal is I go to a property and I call the buyer on FaceTime or Zoom, and then we virtually walk around the property. So we're able to do that, and now more than ever, we are seeing some innovation in real estate in terms of most of the listings that are out there now have virtual tours. Most of the listings have videos on them, which was something that even a month or two ago was few and far between. So in a way, we've had some good innovation, and that's definitely very positive. Now, right now, what I'm seeing is the supply of property pretty much across the board has been constrained artificially because people are not, in the middle of the pandemic, people are not having parties come in and out of their apartment or their townhouse or whatever it might be. The only properties that I'm seeing going into the market are properties that are vacant, and usually they're investors, be it an investor that bought something and is reselling it after renovation, or it could be an investor as in a foreclosure. So right now, at this time, we're seeing, I mean, a lot of people on social media, a lot of people are looking at sites, looking at real estate websites. So there's a lot of eyeballs out there that are interested in just content. And so as a result, buyers that are out there, and I am getting phone calls, buyers that are out there really don't have a lot to choose from. So so again, the supply is tremendously constrained, and we can talk about just across the board all different types of properties, asset classes, from residential, condo co-op to large apartment buildings. And I think one of the most interesting things about the real estate market, especially over the last few years, is that each segment has been different. Commercial apartment buildings are, it's one thing that's happening there. And, you know, residential, small condo studio is something totally different. So just to keep it simple, I think just today I'll just focus on condos and what's going on with condos, and also a little bit about what's happening in the Bronx. So just starting off with condos and co-ops in Manhattan. Again, the supply is is little because anything that was listed before came off the market, so people stopped showing. Anything that has been going into the market is just very little. So while I'm getting phone calls from potential buyers or investors that are looking for property and say, if you find something for me that makes sense, I'm interested in moving forward. So again, you know, lack of supply. There are some people out there that are serious. With potential sellers over the last couple of weeks, I've probably had this very conversation with maybe half a dozen or more clients. Right now, there is the potential that if someone is thinking about selling, it's probably better to go out and put it in the market now rather than 3 months from now or a year from now. Why do I say that? Excuse me. Why do I say that is because even in the most rosy of scenarios, even the most positive scenarios, with New York on pause until I believe it's June 13th. Okay, let's say that after that, New York gets unpaused and the economy starts to slowly open up, and we don't have a catastrophic second wave of COVID, and we just have to deal with the with the consequences of what's already happened, which is unemployment and a lot of businesses being closed. So if that's the case, obviously we're going to be in a buyer's market. We'll be in a buyer's market probably anywhere from in Manhattan a year to 3 years, let's say, to absorb all the inventory of that's out there. And I think what you'll see is that people that don't need to sell or not very motivated to sell, they won't sell. And people that don't really need to buy or not very motivated to buy, they won't buy. So the only people that will be transacting in the residential real estate market will be people that are very motivated. So I think that it'll be an interesting time for buyers to perhaps, get that first apartment or upgrade or, get an investment property at a discounted price. It's something like, the stock market's going up and down every day. And so, if Google drops 30%, for sure there's going to be investors that are going to jump in and say, well, it dropped 30%, I'm in. I want to buy it on sale. And the same thing happens with Manhattan real estate. In the previous downturns, that's exactly what happened. In areas, if we talk about just neighborhoods in Manhattan, the neighborhoods that depreciated the most were the areas on the fringe, the areas on the kind of the borderline of the cusp. So when Midtown West was really just becoming an area, the financial district was just becoming an area. So those areas suffered the most in terms of depreciation. Meanwhile, other markets that were a little bit more established and stronger, they wound up just taking longer to sell, had a little bit of depreciation, but nothing like, nothing tremendous like what you might expect. Just for example, next door to my building, there's a building 392 Central Park West at West 100th Street. We have 4 buildings in our complex here, and roughly 1,600 or so apartments. It's a condo. There's studios that usually are around 700 and change, and the monthlies are only around $600 a month, so meaning your common charges and taxes. So these studios are bought by first-time buyers. They're bought by investors. A lot of times investors buy them because they're easy to rent out. and the monthlies are low. So normally, normal price pre-COVID was like in the low sevens. 2 weeks ago, someone put a studio on the 20th floor, so that's the top floor in the building, for 650,000, which was the lowest price that I had seen for such a high floor in quite some time. It was a price when you saw it, I thought, wow, that's really aggressive. That's really a great price. Sure enough, after 7 days in the market, Street Easy has it as in contract. So it just goes to show you people are transacting in the market, but they have to be enticed. So this is a conversation I've been having with a lot of people that are thinking about selling, is that we're just going to have to be aggressive with the price. If we understand that from 2 or 3 years ago, the market went down just in general across the board about 15%, some markets more, some segments less, then we have to figure from there at least another 5 to 8% from pre-COVID to now. Because while there are buyers out there, they're only going to pull the trigger on something if they're enticed. So I think that kind of gives us a little bit of idea, what's going on with the condo market. I think as you go towards the higher end, that's a totally different story. So when we talk about properties that's $3 million and up, it really depends on what it is, but maybe we're talking about a larger apartment, maybe a family-sized apartment, so to speak, and we have to watch the trend on those type of apartments to see if after this pandemic starts to shake out, are people going to be looking for an exit to the suburbs? Right now, certainly the brokers in the suburbs are inundated with people, but that's mostly has to do with rentals, because people want to rent and they want to find a house or someplace that they can be, so that they can kind of wait this out. So we'll see if that becomes more of a major trend. And as far as the other market that I deal with a lot is the Bronx. And the Bronx, like a lot of places right now across America, is a starter market for a lot of people. And what had happened pre-COVID is there was no inventory. I had several buyers that were out looking for property and just constantly outbid in the process. This is for one family, two, three family, 1 to 3 family primarily. And so what's happening now is where normally during the course of a week in the Bronx in the multiple listing, we get maybe 60, 80, like 80 or so properties that go in the market. Now we're getting like 7, 6. So it was a market that was already very low as far as inventory, and now anyone that is out there, they really don't have much to choose from. A couple of properties that I've seen. One property was a 3-unit building in the South Bronx, and it was actually legally a 2-family. So the buyer that would purchase it would need to make it legally into a 3-family. So there was some work, at least administratively, to do, and there was no guarantee that you could do it. It was priced a little bit above the 2-family price and definitely below the 3-family price. And sure enough, even though it was somewhat of a complicated transaction, I noticed it had already almost gone to they had sent out a contract after roughly 2 to 3 weeks of being in the market. Right now, myself, I'm selling a property in the Morris Park section of the Bronx, and it's a 2-family, and I am seeing a fair amount of activity, more than I really expected that I would be seeing. And so we're conducting virtual visits, virtual showings, where I go and I call the buyer on FaceTime or Zoom, and I definitely expect that we're probably going to see some offers after only about maybe 10 days to 2 weeks in the market. So anyway, there's definitely activity, and what are we going to see going forward? Assuming that we we don't have a catastrophic second wave, and we don't see the stock market totally crash, and things the economy opens and slowly starts to open up without too much of a hiccup. We're definitely going to see a buyer's market in Manhattan. And in those other areas where the inventory is short, like places like the Bronx, perhaps we're going to see a little bit more inventory, perhaps. But the difference is that if people don't need to sell, they probably will decide not to sell. So in a condo setting in Manhattan, people can just choose if they decide they want to live somewhere else, they can choose to rent it out. Whereas if we're talking about a co-op, they can rent it out for a couple years, and then normally they either have to sell it or move back. So it's not as flexible. So this is overall what I am seeing on the real estate market. So just to kind of sum it up, I am seeing activity. Okay, the supply of property is constrained because just people are not putting property in the market now. So that does leave a little bit of an opportunity in the conversations that I've been having with my clients over the last couple of weeks, is that if you're thinking about doing it in a year, don't wait a year. If you're thinking that you might do it in 2 years, don't wait 2 years. Let's do it now, because whatever we can do now, it's going to be better than what we're going to be able to do in a year. And I had some previous lives. I have a live every Monday at 7:30 on Instagram and then also on Facebook. So please feel free to join me. Last week I had a Monday and Tuesday, I had two different lawyers. One was James Stryer, who we talked about wills, estates, and trusts. So now that we're on a little bit of a pause, it's a good opportunity to maybe get things in order. So that was on Monday, and you can see that on my Facebook page, and you can also see it on YouTube. I'll post the links here. And on Tuesday, I spoke with a longtime real estate attorney, Philip Ornstein. That was last week. And we spoke about just the activity that he's been seeing, and he's kind of been seeing the same type of activity and also kind of concurred with my opinion. So anything that you guys would like to see, in the coming Monday Night Lives, feel free to send a comment in the comment section. And so I'm very grateful for you tuning in, whether you're here on the live or whether you're watching the replay of this. And feel free to make a comment, even if it's after the live. I'll always check it, and we could have a conversation when you like. Take care, and I'll see you soon.